Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we'll be tracking the market together using the live market quote page as the tool. So this will be between 15 and 15:45 GMT. So I have given the part 1 between 9 and 9:45 GMT. So what happened to that particular call, and also with regard to the highs and the lows which are set in the live market quote page, and also what happened to the positions which are taken, whether they earned money or lost money. So this, before going to that, let me give the link for the live market quote page. So you can open it in a browser, and I'll review with regard to the initial lows and the highs quickly, and then come back to that of the trade. Now, euro is currently trading around 1.373234. The new low has been set 1.3727, and during that European session, the initial low was 1.3799, and they formed a new low 1.3796 and went up to 1.38, but they are not breached the high 1.3837, and earlier it was in positive net change. Now you come across 71 pips negative net change. Similarly, GBP, during our talk, when I had taken a position around the initial low of 1.6122, and then subsequently during my discussion they hit my stop, and then I took a buy position at 1.6095. I closed it with a profit, but later on they set the low as 1.6070, and they have not been breaching that throughout the European session, but gap time also they have not breached it, but during the US session they started breaching it, and they formed a new low 1.6035 just from that of 1.6070, just 35 pips below, and they are holding it. The high is not been breached since Japanese session. And in the case of yen, so you come across, in the case of euro, GBP 103 pips negative net change. And in the case of yen, it is trading around 81.81, 81.84, 81.68 is the low, which is not disturbed. The 82.05 is also not disturbed. And they have formed a new low, and it is trading with a negative net change. So when euro, GBP and USD yen are showing negative net change, we understand that they are doing the contrarian move. And in the case of yen, as CHF, they just gained the levels, because now you come across the USD gaining sentiments. So as a result, they gained about 53 pips in the case of CHF, and they breached the initial high that was 92.67, and then went up to 93 during the close of the European session. Then they had gone another 15-17 pips. So when euro has gained about 70 pips, euro has lost about 70 pips, CHF has gained only about 54 pips. So you can understand it is also a relative contrarian move. Because of that, euro GBP, euro CHF has made a dip below that of the psychological level 1.28. So they are trying to handle the crosses, and this is very evidential when you compare with that of the commodity pairs. So Canadian dollar is showing negative net change, and they made a brief downward stop end below that of 98.13 and formed 97 as a new low, and showing about 12 pips negative net change, whereas Australian dollar has not dropped, and it is showing 55 pips positive net change. So the commodity pairs are showing USD weakening move, and the majors are showing USD strengthening move, excepting yen. So we understand that they are doing the contrarian move to handle the crosses for the weekend before coming to that of the majors. So with this understanding, I'll go back to that of the PowerPoint presentation. So we are not developing any bullish or a bearish feel. We are only trying to understand what the players are trying to do. So when exactly we can initiate a trade, and what direction we can initiate the trade, so that we will be able to earn some money. So during that of the part 1, I gave the forecast that they will make volatile moves and then rise. They made the volatile move. but not made a significant rise. So that happens. Then you know that I enter around 1.2823 with the 30 pip stop, and that was hit. 1.3793 it was stopped out, and I lost about 30 pips in that. Then subsequently I re-entered after 2 hours, as I explained that when they stopped cutting the new low for the last 30 minutes in the 2 hour, it might be an extended move. So I took a buy around 1.3767 and then stop at 1.3737, and once the position makes profit around 13:30 GMT, when that US GDP number was announced, they took it up. At the time I just closed it with 31. I lost 30 pips and 31 pips gain, so just a brick almost. Then in the case of GBP, I took around that of the initial low, a buy position 61.22, because that was not breached. But subsequently during the discussion, the stop was hit, 30 pips loss was accepted. Then I re-entered because they did not breach that low at that time after about 30 minutes of our talk. Then I re-entered in the market 1.6095 with a stop of 1.6065. They kept the low as 1.6070 and they had not dropped it at that time. Then after the US GDP number, they went up. Then I closed it around 1.6107 with 12 pips profit. So here the loss was 30 pips and the profit was only 12 pips. A nominal loss was accepted. Then in the case of USD CHF, then I took a buy. I placed a buy order 92.67, that was not filled. Then I modified when they made a dip. I took a buy position at 97.72 and then subsequently kept a stop. The USD CHF started going up. So it went up to 93.03. At the time I just closed it with 28 pips profit. So I closed all the position by before 14 GMT because the session got over, and obviously then you'll come across the gap time moves and the initial session start move during that of the US session. So it is 15 GMT, and you know that because of the data release, University of Michigan consumer sentiment data, they made a small downward move in the case of Euro and the CHF, Euro and GBP, and then we found that they are hovering around that of the low. So let us see how exactly we can take a trading decision on that. Australian dollar, I kept a buy limit order that was not filled, and during my talk it came down, but subsequently it went above 1.01 level, and actually you could have taken a position, then it would have made a profit. Doesn't matter. So as long as the limit order is not filled, so I always look at that next opportunity will come, then we will try to earn that money. So by keeping the stop, I was able to limit the risk, and when the going was nominally optimal because the market was making very subdued move in anticipation of that US GDP data, then I found that they are not making any spikes, indicates that there are a lot of long positions when compared to that of the short positions, and the way in which they gain the level slowly, it indicated that they wanted to just make a dip drop during the gap time, probably during the early US session, and then subsequently they are expected to gain the levels because the players are holding long positions, and if they are really building sell positions, they will not make a drop of this nature, a slow drop, and they will normally make a quick drop of 50 pips, 100 pips, 150 pips and things like that. And if you see the net change, only in the case of GBP it just breached 100. All other pairs, they are not made substantial drop like to know that the players are sellers, and they are only inducing the long holders for the US session, early US session to liquidate, and then subsequently they wanted to gain the levels. So that we will be able to understand now slowly from that of the mid session because they have been handling crosses. Whenever they handle the cross, understand that they find less volume in the majors, so obviously they try to focus on the crosses before even start of the mid session, and after handling the crosses towards close of the session, they handle the majors. So this is what happening for the past 2-3 days. A lot of questions are being asked in the blog during the year session that the gain was not happening, and then subsequently we have seen towards close of the session they made the gains. So in this particular session, let us decide how exactly we can take trading decisions. So first of all, before going to that, let me just explain that session timings which are followed by that of the players. So 0030 to 7:30 GMT is session 1 or a Japanese session. You can call it by any name, but that is how they do it. And there is a gap time between the Japanese and the European session, 7:30 to 8. During gap time, they make false moves or a dip or a rise, and opposite to that will be seen in the first 30 minutes to 1 hour of the early session. And then European session is from 8 to 14 GMT. Then 14 to 14:30 GMT, there's a gap time. They made a drop, and then subsequently they made a brief drop during that of the early session. 14:30 the European session start. In the first 30 minutes they breached the low. So what we are supposed to do in such a scenario? So I explained earlier also that if you want to track the market easily and with easy communication with others, follow that in GMT time frame so that anybody talks in GMT time, you will be able to understand. Then identify the gap times. That's what the timings I have given. The session start, mid session and late session. Normally mid sessions they are expected to handle the crosses, and during session start and session close time they will be handling the majors. The 4 majors, Euro, GBP, USD, CHF and USDN, and also the commodity pairs, Euro, Canadian dollar, and USD CAD and also Australian dollar. So we track the market using the live market code page, and there you will be able to see the live price action, and also we come across how exactly they place the orders. So if you would have watched carefully around 15 GMT, they showed in the case of Euro 1.3742 in the bid, and the ask was showing 1.3727, and so that is how they show the higher bid and the lower ask. That is to cross check whether the stocks are there, the limit orders are there, so that accordingly when the traders have liquidated the long positions and turn short and keep the stop loss above that, then they start making the rise. Till this time they will try to alternatively punish the long holders and the short sellers and earn money. And this is a question of not that they intentionally punish, they try to make such moves so that they are able to earn money from that other market. So we have to identify a currency pair which has got a spread of more than 40 to 50 pips so that there could be a good trading opportunity in that particular currency pair. Otherwise, you may have to look for a breakout trade when it has got a narrow range consolidations. And during that of the European session, we have seen yen was making a very narrow consolidation, and from that of 81.87 they made 81.68, and that would have been a nominal breakout trade. Then also no sentimental attachment to currencies, and if the currency is near that of the high, we will try to take a sell position if it is not breached, and when the currency is near that of the low, initial low, we will try to take a buy. But now they have breached the initial low what has been set during that of the Japanese session. So obviously we have to look into that of the alternative strategies. So the entry we take depending upon our decision when there any new low or a high which is not been breached in our observation of 30 minutes, then we try to take a buy position near that of the low and sell position near that of the high. Now if you see in the case of Euro, they are coming closer to that of the low again, and still after 15 GMT they have not made the breach of the low. So let us watch for another 15 minutes or so and see whether the low has not been breached. Then we can try to take a buy position there once they finish handling the crosses. Otherwise, we can wait for them to consolidate here, and we know that once they handle during the mid sessions the crosses, Then they will come to that of the majors from that of 16:30 GMT onwards, because Friday closing will be earlier when compared to that of the normal closing days. Then they will try to induce the short covering during that. Because a lot of traders who have got the long position, they liquidate the long and turn short in order to earn back the money, thinking that there is going to be a big fall. And the players know very well how to earn from such people who alternatively trade without any of the planning. Then use stop to limit the risk. Once the position makes about 20-25 pips profit, keep stop at entry so that you don't incur any loss. That is the trading strategy, irrespective of the type of analysis we try to take it. Because no analysis will have 100% perfect projections of what is going to happen in the market. So obviously there will be an element of error involved in that. So we cannot afford to take unlimited risk. In case if you want to take unlimited risk and you think that you'll be able to withstand such pressure and the tension and the emotion control, then probably you can think of averaging trading. The averaging can be for about every 150 pips, and it should be in the form of micro lots, so that around 0.1 or 1% of your equity can be exposed at a given time and spread the risk. And that is one way of trading strategy, wherein you can spread the risk of every 100 to 150 pips, so that in an averaging, when they make a pullback, you'll be able to either cover it with a nominal profit or with a full profit in all the positions. There are various trading strategies I explained in my trading system. You'll be able to see that. And ultimately, I insist that everybody focus on the trading strategies, because we may envisage something and certainly something can happen. So we cannot try to go in for the crisis management, and that will give a disastrous effect. Instead, we plan the risk and try to act on that. So always we keep a contingency plan of keeping a stop, so that in the event if the market goes against, we'll accept a small loss, or we accept the loss when it is small. And if you do not want to accept the loss, then we'll try to keep stop at entry as soon as the position makes about 10 to 20 pips or 25 pips profit. Then we give equal weightage to that of the entry and the exit, and fine tune your entries and the exit by keeping limit orders. Because many of the platforms, when you try to take the market positions, they will give the slippage. Whereas if you keep the limit orders, then they will try to fill it as you have defined the levels. Then that is an advantage. And also they normally make small swings. When they make a small swing near that of the low, then about 10 pips below that of the current level, if you keep it, and they could be able to fill it. In the event if they are not filling it for about 30 minutes, then you can just fine tune and enter at the market, so that you will be able to take a chance of keeping stop at entry. Then avoid impulsive decisions like buy during quick rise or sell during the drop. Now they have dropped it, and don't imagine straight away they will go down deep into the sea and try to take a sell position without any contingency plan. And you can always do sell and buy trade or a buy and sell trade, but try to keep stop at entry and try to keep a stop to limit the risk. And these two are very important depending upon the perception what you get it from the other market. Now in the event if the low has been breached, if the initial high or low are breached, identify the type of move. I explained that the stop ends are for 30 minutes, and so during that of the European session, they made only a stop end of the downside. That is why I decided to take a buy position near the low, because there was no opportunity for me to take a sell position near the high, because the market was not near the high at that time. Then also they made a false move in the case of GBP. They came up to that of the low 1.6122 and went up. So I just kept a buy order 10 pips below, and they filled it, and then subsequently they made a small rise of 5 pips or 10 pips I think during the discussion, but quickly they made a drop and filled my stop at that time. Doesn't matter. So that is why we always have the view that we perceive like that, and there is no definite guarantee that it will not go against us. Then the extended move, that is, in case if they breach the low and come down and form a new low, and they are not pulling above that of the initial low, then we have to wait for 2 hours, so that the last 30 minutes, if they don't breach the new low, then we can take a buy, then it will be able to give a profit for us. That is what I tried. After 2 hours in the case of Euro, I took a buy position because it is holding all the time near the low. I do not want to do a short sell there after the drop. Then they went up after the data release, but you know that the GDP released from that of UK was negative, less than expected, and the GDP released from that of US is also less than expected. But still, you find when GDP data was released from UK, it was negative. They did not make a drop in the case of GBP. Then after the GDP data released from UK, they gave more importance to that and then gained the levels in the case of Euro and GBP, but it was short-lived, and subsequently they started making their own way, their move. So this we need to understand, that there is no guarantee that they will respect the fundamentals or the technicals or anything. Ultimately, you find that they have the inside information. Accordingly, they act, and they also try to see that where the cluster stops are, so that they will get a great earning out of that, hitting the stops. So it is a question of blind man playing with the dog, the men with their eyes. So intentional move is nothing but a move wherein they continue to drop for about 2 sessions, and the third session they continue to make one more dip and then reverse the market. So if you watch it, during the Japanese session, they have been making the swings without breaching the low, and then from European session onwards, they started breaching the low, and now you come across the US session, they are dropping it. And if they go above that of the initial low, then there is a chance for it to go up. And if they don't go above, then probably they might just hold it. Stop-ins are the moves which they make it as 150 pips rise and 150 pips drop in just a matter of 30 minutes to 1 hour. And during big trend reversal times, they do it. Monthly trend reversal times, so not seen now. Then we wait for 2 hours to enter into that of the market, and in case if they are not gone above that of the high, initial high, in our watching of 30 minutes after making a new low, at least the earlier low they have to breach in order to take a buy position. Otherwise, they are expected to hold it near the low and simply induce the longs to liquidate. So even though the forecast says that they could rise, and the market reading, we have to use it to fine-tune the forecast. Then if they cut, and it doesn't mean that we can straight away do a sell and buy trade, because the technical trade wherein we will try to take a sell position only near that of the initial high, low, and not at the bottommost level. So if they gain the level and quickly and come up to that of the initial level, not able to go up, initial low and not able to go above, then we try to take a sell position after forming a new low. And that happened around 13:30 GMT, but the session was not there at that time. So at that time, the holding buy position, I simply booked a profit, because after forming new low, they gained their level. So I do not want to take a risk of holding the position for the next session. That is why I always advise that you try to close the position within the session, because in between the sessions, during gap time and the early sessions, they are expected to make some swings and may not be able to quickly enter and exit during such time. So in this session, the forecast says that Euro and GBP are expected to swing and rise for the weekend. At the moment, it doesn't appear that they have got a potential to go up, but still we will review it, how exactly they have handled the new low. Now currently Euro formed the new low 1.3724, and I told you that we will wait till 15:30 GMT, 30 minutes from that of the new low formation. They are not breached the low, and it doesn't mean that they will not breach it, but the chances are very, very less. And normally once they set the trend in a session, the early session always they make a swing. Afterwards, once they set the trend, they continue till end of the session. And so keeping that in mind, we find in the case of GBP also 1.6033 they formed as the low, and now they have come up to that of 1.605255. They made about 100 pips negative net change, and slowly they are gaining the level. So this is the strategy. They do it. Those who have taken the lowest level buy also, they just hold it so that they just book about 10-15 pips profit, and they do not want to hold it for a longer period as the market looks uncertain. So this is the strategy. They do it. They hit the stops and buy all the stops at the lower level. Afterwards, they discourage anybody taking a buy near that of the low, and even if you try to take a buy position near the low, and they try to avoid rising it immediately so that you just out of fear liquidate it with a nominal profit. Later on, they slowly gain that move levels, and that becomes the intentional move. And in the case of CHL, if you see that, I was telling you that they went up to 93.17, and then from there they started making a dip, and it has come to 93.06. As I explained, they are handling the crosses, Euro, GBP, and CHF. Probably I'll just go to that of the live market code page and focus the camera so that I can point out. Oh, sorry, when you keep the camera, it goes blank. Now, currently you come across that Euro, GBP, and Yen, they are still showing negative net change, and USD, CHF, which gained some levels and started losing the level in order to handle the crosses, and Canadian dollar has come up, and Australian dollar has also gone up. So from our at the time of your presenting, Australian dollar started gaining. Normally, they make such moves in the case of the commodity pairs as the leading pair, and then subsequently you come across the other pairs to follow. This way, they are able to handle the crosses of the commodity pairs. So in the commodity pairs, you come across still the USD weakening move, and in the case of majors, excepting Yen, you come across the USD gaining move. So it is a typical contrarian move, and since CHF, which is showing USD gaining move, slowly it has started making a dip and holding around the psychological level 93.07, and Euro and GBP, they are not making any further stop on the downside till 15:30 GMT. 30 minutes we wait. So 15:28 now. So in another 2 minutes to go. So let us just try to keep some limit orders and see whether they are being filled, and then we will take it up from there. And still we are only trying to take based on our market reading understanding that they have been handling the crosses for the weekend before coming to that of the majors. So the new low in the case of Euro is 1.3724, currently trading around 1.374042. So we will try to keep closer to that of the low, just 4 pips above that of the recent low, so that we'll get a definite fill, or 2 pips. If the spread in your trading platform is just a 2 pips spread in Euro, then probably you can just keep it like this. A buy limit 1.3728, because 1.3724 is the recent low with a stop of 30 pips. Okay. Suppose if the hedging facility is available in the trading platform without a stop, we can just keep the hedging order in case if they fill it and go below, we can book profit that way. And also I explained that we can cut the original position and try to book profit in the sell side when they drop further down. Whereas if the hedging facility is not available, it may not be very wise to use 2 trading accounts and try to take opposite positions in the hedging. And that I'll probably explain in one of the webinar how exactly the 2 accounts can be handled as my view, and that is not a hard and fast rule, because based on the usage I just derived certain concepts, and also how to trade the crosses. I'll probably give another webinar and do it, or during the next Tracking the Forex Market Together webinar I'll try to handle that. Then GBP, or try to explain that. Then GBP is trading around 1.6054, 1.6033 is the low. We'll keep a buy limit order. Just 4 pips above that of the low. 1.6037 is the stop of 30 pips. So we are not become panic just because they made that drop. And the drop, we understand that they have done it mainly to handle the cross. In case if we come across all the currency pairs are showing USD gaining more, then okay, they are buying US dollar. And so all other currencies, they are just exiting out of that and dropping it. When they make contrarian moves, and that gives the signal for us that they are only handling the crosses. For that, they have done certain drops on the gains, etc. Say, for example, Australian dollar gain and euro drop is mainly to handle euro Aussie cross. Similarly, euro Canadian dollar cross, GBP Aussie cross. So this is how they just make contrarian moves and make such stop-ins on the downside or on the upside. Then in the case of CHF, so still it is above that and above that of the initial high, but initial high was 0.92767, so we will not enter into that. Yen also, it has just breached the low 81.81 and formed 81.68 and 81.78, 81.81. It is just holding. There's no point in doing it. We can only do a technical trade up for 10 pips, so we will avoid it. Australian dollar, it has just breached the initial high 1.0135 and holding above that of 1.0135, and it has gained about 34 pips. So we'll keep a buy limit order. Four pips above that of the initial high 1.0139 with 30 pips stop. It's a technical trade, so it has breached the initial high and staying above that of the initial high for more than 30 minutes. So we'll just only keep about 4 pips above that of the initial high 1.0135 a buy order and keep 30 pips below a stop. And once the position makes profit, we'll keep stop at entry, and any technical trade we try to close it within the same session. And most of the currencies will close it within the same session as a swing trade. But technical trades you cannot carry to the next session because you might incur loss. Then Canadian dollar, again the spread is very, very narrow, less than 30 pips between the low and the high, so we will avoid it. And the N crosses, they made the dip, but you know, in the case of crosses, whenever they make the drop, they simply continue to hold it and buy it. Only next day they will give you the profit booking opportunity. So that is the thing we need to understand, especially with regard to Euro GBP. It's a European cross. I was telling you they are making an upward stop on around that of 0.8591, and then subsequently from there they had dropped it because of more drop in GBP and less drop in Euro. That sort of move they had made. And also in the case of Euro CHF, morning we have seen it. Euro was showing positive net change, CHF was also showing positive net change, and then subsequently they gained the levels from that of 1.2749 to 1.2841, and by the time we looked into it, it was trading around 1.2822, so there's no point in taking position. But now it is showing positive net change, Euro CHF 1.2789, and 1.2749 is the low, and they came just to 1.2760, and then they are holding it. They are not breached the low, so we will keep a buy limit order. Because they had done earlier the contrarian move of positive net change in the case of Euro and positive net change in the case of CHF. Now you come across negative net change in the case of Euro and positive net change in the case of CHF. But still, Euro negative net change is more when compared to that of the positive net change in the case of CHF. We understand they are holding it at a lower level to buy, and later on they wanted to rise. So we keep a buy limit order. See, earlier they came down to 1.2760 because I wanted to explain here. I am explaining about the cross here, and if you see, it is showing positive net change. Throughout, it has been holding it as a positive net change, and 7 pips positive net change is seen. 9 pips positive net change is seen. So we can buy below that of the psychological level 1.2791 at the market with an entry with a stop of 50 pips. And always you know that in the case of cross, we have to keep 50 pips stop or the hedging order because they make very volatile moves there. Now you find that Euro and GBP are making slow gains, and during such stop-ins, once you are trained enough, once you are able to understand they are making stop-ins on the downside and things like that, during such stop-ins, if you try to enter in the market, then you'll find that easily we'll be able to keep stop at entry. And 30 minutes they take to make the stop, and but in the first 30 minutes they will form a low, afterwards they will not breach in that 20 minutes and try to come up. So if you become an expert, then in the first 30 minutes, if they form the low and not breaching that in 5 minutes, we can try to take a buy near that of the low. That sort of fine tuning, you can do it, and you have to identify the type of moves very perfectly. That is very important. There is no question of simply using a forecast, simply doing some analysis and thinking that, okay, this is the pivot point, so I'll keep a buy order there and things like that. Instead, you try to follow their moves. You'll be able to, irrespective of the levels, you just follow what sort of moves they are doing it. And they are always doing the cunning moves in order to earn money. Because if the money has to earn money, the only way to earn is cunningness. If the money has to be earned in a genuine way, it has to be converted into effort, and the effort will earn back the money. And normally, if somebody is hired and they pay money as a salary, and the person who is hired is trying to put in the effort to earn for that particular company. So the owner pays the salary, and the money is converted into effort, and then effort get back the money. That is a normal, genuine way of making money. But if money has to be made money, has to make money, then obviously the only way is act cunningly. And if you have noticed in the case of GBP, they showed the bid 1.6080, then the ask was 1.6064. So you can understand that they are just checking it, and they will do 3 times the checking, then subsequently you'll come across the quick rise happening in the market. And then probably somebody will say that when the rise comes, Sivaraman will try to just show up his face and things like that. It is not like that. I want the people to understand how they are acting. No, I don't have any control over them. You have to understand. So I'm trying to read their cunningness. That is the only skill set I had developed. And if you develop the same understanding, so that you'll become cautious. See, in life, there are genuine friends and there are cunning friends. And there are some people who will pretend as a friend and they will act cunningly against you. So we have to recognize. In life also, if we fail to recognize such people, they try to deceive us, then we will be put into problems. Similarly, in the financial market, when they want to earn money from that other money, it is like any other financial institutions, or any other broker for that matter, when you wanted to open a trading account, they will give a royal welcome to you. After opening an account, if you ask any disputes and things like that, they will just show a cold face. Similarly, when you make an investment, and when they find that they have got enormous money, and they will come, and mutual funds and others, they will come and approach you, asking you to deposit the money, these schemes do better and things like that. And subsequently, when the market goes bad, they will simply say that, why don't you switch over? Okay, this is a normal scenario you come across in any financial sector. Okay, so don't think that the players are alone acting cunning. In any financial sector, you come across this act. So we have to understand, we have to be cautious. We cannot blame them. That is not going to help us anyway. And we have to limit the risk and take the chance. And we do the reading perfectly and take the chance. Still, our stops can be hit. But if we try to read it much more carefully, then the chances of stop being hit will be less. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the line of the code page. Okay. Then Matthew, generally players will make false move during week beginning, but you told that big rise on Monday as it is month end. Yeah. See, next week you find 28th of February is a Monday, then followed by that you come across month of March. So in a week you come across one month gets over, another month starts, then they are expected to make volatile moves, not week beginning false move. So first week of the month and the last week of the month, they are expected to make sudden volatile moves, big moves, in order to induce the traders to commit positions in the futures and the options market. So, and they try to make big volatile moves during that particular time using various other strategies like non-farm payroll, or before that the interest rate decisions, etc. They are expected to make spikes on the upside or on the downside and induce the traders to commit wrongly. So suppose somebody has taken a buy position, immediately you will try to take the hedging with regard to the options and things like that. Later on they try to rise, but you will be losing in the hedging. So this is how they just make the traders panic. For that they have to necessarily make volatile moves. Only then, once the traders commit the positions, then they can earn from them. The traders keep away from the market. If they don't commit anything, you'll simply see the market is flat, like a holiday. Hope you are able to understand. Okay, London closes by 17 GMT. That could be a reason also, but normally the late sessions, they do it, their intentional move later on. And this drop, I am very sure that they have dropped it in order to buy and rise, and they wanted to buy it at the lower level when many of the traders are holding long positions and they are weak-minded and they are not kept the stops, though. So they made one first 30 pips drop and see whether the longs are liquidated. They get the information, and if they are not dropped it, okay, make one more drop. Whether US data is negative or positive, make one more drop. So that automatically those traders will turn bearish. They following the technical analysis, because the fundamental says that USD has to weaken because the US GDP is weak. But technically market is overbought, so it has dropped. That is how it will be derived and commented. Immediately the long holders will liquidate, and later on they stop doing the stop hunt and start gaining the levels. On a daily basis they do this. And Mike, why do you set the end of European session is 14 GMT? That is how I have not set it, Mr. Mike, and this is how the players use it. Between 14 and 14:30 GMT, you come across the very quick false move. So when they make a false move, that will be the gap time. That is how the times are being derived. And also with other confirmations, I just taken up those timings from that of the dealers in the bands. Then Ariel, do you buy or sell euro at 1.3767 and what GMT? No, I did not sell. I made a buy around that particular level. When they made a drop around 12:30 GMT, then subsequently I closed around 13:45, 13:50 GMT. Then Matthew, if GBP does not go above initial high, will it come down again? There's a chance it will go up to the high, initial low, and we have to see how they are handling that initial low. You know that recent low was 1.6070, and the recent low in the case of euro was 1.3757. So if you avoid seeing into the of the chart and just remembering the numbers, you will become very, very sharpened with regard to your mathematical ability of remembering the numbers, and you will be able to easily understand what they are trying to do it looking into that of the live market code page. Otherwise, you have to look for a figurative expressions of those things. Unfortunately, in the charts, if you look for a 15-minute chart or a 30-minute chart, the fine-tuned levels are being suppressed, and you look only into that of the candle or a tick. And if you go in for a tick, but you will not be able to compare it because the time duration will be very long. You need to have a very long chart to look into that. And otherwise, if you want to reduce the time frame so that it will come within your window, but the thing is, most of the fine-tuned levels are being normalized in that. And we only find a certain noise on the upside and the downside. But actually they are the stop-ins of those players. Then will GBP come down? No. We have to see how they are respecting 1.6070. After reaching 1.6070, if they not able to go above that for 30 minutes, then they will come down. They quickly go above and stay above 1.6070. The next target is 1.6122. And if they go above that and stay there for more than 30 minutes, then they will go near the high. That is how every level they carefully handle it, because the players don't do much of an analysis. Let me tell you, the richest people, they don't use their brain much. They don't do any complicated analysis. They want hot information available from sources. Based on that, they act. And in that process, when analysts give the reviews and the analysis to them through the banks, and they simply laugh at it and they try to do on their own. And when fundamental data release US, it shows that, okay, it is USD weakening, and they just make a false move upward and then drop. So nobody can question them. So this is how they act. So now you will be able to understand before your eyes how exactly they are playing with the traders. And they can give any sort of attribute later on. Then what about Monday Japanese session? They are expected to open nominally flat after closing of the US session and then slowly gain the levels. And I'll give you more during that of the Asian session. Any possibility to grab GBP by next week? Yes, they are expected as per my algorithm, but still we have to do the market reading from day to day and fine tune our forecast. Then Eunice, sorry, I was not there at the beginning, but can you please explain how we can see which currency is the leading currency? No, you have to see which currency is making about at least 40 to 50 pips spread between the high and the low, and that currency you can pick it up. And normally you come across some currency, especially the commodity pairs, either the Canadian dollar or the Australian dollar. They try to lead the rally and lag behind, you know that. So if you see Australian dollar, they are leading it, and see you are coming across that gradually the net change is becoming higher and higher, but still Euro and GB we are in negative net change, and later on you'll come across they will also come to the positive net change. And on Wednesday they made a similar move and then subsequently reversed it. If you look into that, you'll be able to understand the previous history. So Mike, how do you exit these positions at what point? Yeah. As I explained that they go up and stall there and not going above that. And also they start showing the bid and the ask. So a higher ask they show in the live market quote page and just disappear. Higher ask is shown. Then immediately you exit. Afterwards they are going to drop it. See, here I showed you the higher bid was shown in GBP when it was around 1.6045. You see, slowly they gained the level to 1.6064. So use their own tools. Don't use any other tool. Use their own signals. That is player signals. Because they get the authentic information and try to play in the market. Because they are risking such a huge amount, billions of dollars. And even if they lose 100 pips, 200 pips in their positions by taking chance, they will lose huge money. So they need to have definite information from reliable sources. Only based on that they make the moves in the market. So has anybody got the guts to drop euro or rise euro just like that? You tell me. And you know what an amount, when a small account is there, if you just to overtrade, take about 10 or 5 lots, and when the market goes against, you become jittery. So if they take about, say, an exposure of 10,000 lots or 20,000 lots, if the market goes against, can they keep quiet? So they will never allow that to happen for them. That is why they continue to be the richest in the world. But they can have all the money in Swiss bank and other places, but they cannot eat. You know that limitations. And grow. Do you expect the GBP USD order to be filled, although it is half an hour? Yeah, they have not filled it, and I was giving more explanation with regard to their talks and things like that. So I may not be able to get the fill because they have not made a drop. But if they go above that of the initial low, 1.6070, and sustain there for 30 minutes, we can still buy there. Not like in between level. Because after going up to 1.6070, that drop, then we will get a chance to buy it again, because still the time is only 15:51, and from the late session only they are expected to rise the levels. Hope you are able to understand how I use the timings to take entry into the market. If I want to take positions in that of the majors, I do this. And Euro CHF, we have taken a position and that has made a small dip. Then callers, I agree that this is a pullback, but why not conclude that they will probably take Euro USD to 1.3? Yeah, they can take it to any level wherever they find the closest stop. Why not? Why you stop with 1.3706? They can find a lot of stops below 1.37 and they can hit it also. So if they understand that there are plenty of stops and there is a great money earning opportunity, and during the hours, during start of the market or during gap times and things like that, they try to do that and earn that. Where is USD? Okay. Buy key for a bear. Probably. And they do that sort of trade only because they have become addictive trade. You know that we can earn optimal money, and beyond certain amount, if whatever the money you earn, you will not be able to keep it on your head or keep it in your cupboards and things like that. You have to necessarily deposit in the banks and they make investments and things like that. And it makes you sleepless only. In college, that is why you find a lot of charities are coming up with it of the top richest in the world. In college, it's Friday and the end of the month, so the players maybe decide to take a bit of a profit. It's not, they are holding long positions from the lower levels and they are only inducing the long holders to liquidate. See, if it's a real panicness they are doing it, they will not make rise like this. So they just fooled everybody by making a drop. Nobody was able to give an understanding why after negative US data, GDP data, the market dropped. Now you find that slowly they are gaining the levels, and later on everybody will say because the US GDP was negative, so Euro and GBP went up. But as trader, we need to know when to enter and when to exit. That is more important. There is, rather than giving a lot of explanations for all sorts of attributes. Then FX works. If they go below the initial low and stay there for more than 30 minutes, we have to wait for a new low, not cut 30 minutes. Yes. Then afterwards, we have to see that how they are handling it. In case we are taking a buy position, if they come up to 1.6070 and they are not going above that, try to book profit there. But if they don't go above that for more than 30 minutes, then try to take a sell position, they will make a drop. So understand that the players only keep the levels what they have set and they don't use any technical analysis or fundamental analysis. It is evidential. When the data was negative, they are not followed the fundamentals and they just made the drop in the case of Euro and GBP. So how decisive they were in making a drop. That means they know very well predominant of the traders are holding long position, hit their stops. That is a signal they have done it. That is why I said that there will be always limitations with regard to technicals and fundamentals with regard to market. So ultimately we have to read what is happening in the market, what the players are trying to do it, and we have to expose the hidden agenda of the players and try to follow it. Then grow. What low are you using for the last session, the last 20 minutes. In the case of GBP, it was 1.6070, and in the case of Euro, it was 1.3757. You can follow it. The live market code page you will be, and if you become habituated, you will be remembering all the levels. Even the next week, if they ask me, I'll tell you what levels they reached. So you will be able to inculcate that practice if you practice it. Anyone else? Gold leading the majors at the moment? No, they are just made the gain, but they are expected to make a very big upward stop on Monday in gold, crude, and also silver month end in order to make the options expiry with a loss. Gold is sometime indicate risk aversion. No, not really, because several occasions when euro was rising from 1.33 to 1.36, gold was making a drop. They are trading around 1,330. From 50 they dropped it. So it is not all the time. Don't try to relate it, because if you try to relate it, you will not be able to understand when they are going to delink it. Yen strong. Then all compare. Okay, indicators getting late. Stop down. Okay. DB. I already asked, what tool are you using? I'm using for the market, I'm using the initial high and the initial low and the net change. And my algorithm is a very complicated algorithm, and it starts with multivariate analysis. From there, I just do other sequential analysis and then try to derive it. Then, how can we identify which currency or trades using when there is a risk aversion? There is no safe haven currency and things like that. That USD CHF, they said that is a safe haven currency, and subsequently they are making a rise and then drop. So every currency will have a swing. There is no permanent situation as safe haven currency. Last week, if you remember, after CHF, they said USD is a safe haven currency. So alternatively, they will shift it. And then they will say gold is a safe haven, crude is a safe haven. And nowhere, you will take only future positions. You have to necessarily liquidate. You are not going to take the delivery of the gold and keep it in your place. And it will be the highest risk if you keep physical gold. At what extent GBP may go down before making a big rise? They are only just visiting below that of the psychological of 1.60. And that earlier they went down to 1.5958 and things like that. They are not coming to those levels. Understand that it is not the real drop they want to do. They are only creating the market sentiment. If you understand, fine. Otherwise, you can also wait for all the moves and finally conclude. Then three currency, okay. Okay, that's all. Let me go back to that of the PowerPoint presentation. So these are all the levels. I kept it still. They have not been filled, and still GBP has not gone above 1.6070 and sustained there and is staying there. So I will not take any decision. I will just wait, because the low has not been cut, but they have not breached the initial high. So if I would have taken a buy position, I would have closed it with a nominal profit. Otherwise, I will just wait for the next opportunity. When the move is very, very sluggish, there is no point in taking. And this is the only position we have taken, 1.2790. And currently, Euro CHF is trading around 1.2774. And we have got 50 pips below the stop. That is closer to the low. And we will see how exactly this particular pair goes up. Still, if you see Euro CHF, okay, now Euro CHF is showing negative net change of 7 pips. If it stays in negative net change for more than 30 minutes, then I will simply close and accept the loss. As I explained, that they have to hold that particular currency for in positive net change and make contrarian move, then we can initiate the buy. But market is sluggish and they are trying to make small moves, and now if they show in negative net change Euro CHF for more than 30 minutes, from now I'll just close it with a nominal loss of 10-12 pips loss. Okay. Hope you are able to understand that. So I take this opportunity to thank FX Street and also you people who have come here to listen to my analysis and also market reading techniques. And We'll meet again on Monday and try to take up Asian session live market analysis webinar. Thank you one and all. See you on Monday. Have a nice weekend.